Lessons to learn about the general stock market. Hello viewers, my name is Antoaneta and I welcome you again to another edition on my channel. It promises to be as interesting. If you have not subscribed to my channel, I wonder what you're waiting for. You may need to see other related content like goals planning, set yourself up for success in 2021, and the best indicator of a high growth stock. And the best to do that is subscribing to my channel. So what exactly are you waiting for? Also, I have a Facebook page that you would love to join. They will have first-hand information about my latest release, and I do have a TikTok as well. So, in this video, we'll be discussing some of the lessons that we learned the hard way in 2020. I will be discussing 5 important ones, and I urge you to follow closely and stay till the end of the video. Without further ado, what are those lessons we learned from the economic hard times of last year? It is the hope of many that a year like 2020 never comes back again. This is because the year came with so many problems that it threatened the economies of different nations. The challenges caused a whole lot of problems, and most of them were unmatched. Investors suffered a lot of losses due to the volatility of the stock market in 2020. The outbreak of the pandemic caused economic meltdowns in different countries, and investors were in for a wild ride. But it's always important to know that hard times never last forever. So in every problem, there is always a valuable lesson to learn. Always try to have a cash at hand. When we were experiencing the bullish run, investors believed that having cash was a waste of capital. Since the rates were paying almost nothing when it kept in saving accounts, there was almost no need to remove money from the market. If we learned anything in 2020, it was that having cash at hand is still very essential. Those who had cash at hand were spared the hardship that came with the financial situation at the time. Also, those investors who had cash to spare could buy more stocks and strengthen their positions. Those investors end up seeing great rewards. It is not always good to panic sell. Most people think they know their risk tolerance level. However, the only way to test your tolerance threshold is when the market crashes and your portfolio begins to lose balance. Then you can know how much you would take and your breaking point. For example, many investors panic sold their stocks in March and April due to the projected economic meltdown last year. It disrupted the market, no doubt, but as with all other stock market crashes over the years, it bounced back with unpredicted speed. Now, those who resisted the urge to panic sell are being to reap all the benefits. Those who sold out of fear are now stuck between two difficult choices: buy back the stocks at higher prices or stand aside and watch the stock prices soar higher. So, to avoid this heartbreaking dilemma, try as much as possible to stick to the long-term investments and avoid panic selling. Bear markets are still in existence. For those who started investing in the early 2010s, you may have heard little or nothing about the bear markets. This is because the bull market has been running the show ever since. There may have been some minor changes somewhere along the line because Wall Street recovered from the financial crisis of 2008 and 2009 and also the Great Recession. It is the mind of investors that bear markets are always inevitable. But even the people that went through one still find it hard to imagine. The outbreak of the pandemic caused a plunge in the stock market in 2020, and it was much worse than what we had experienced in the 1997 stock market crash and the early 2000s due to the tech bust and the most recent 2008 meltdown. These are all examples of bear markets, which all seems to arise from the financial system and the excesses that came with the huge profits during the years before those events. However, The 2020 bear market was different because it was due to the health reason that seems to be beyond the control of the health factor and even the financial markets. Investors were given almost no choice but to be reactive, and that made the control of the stock market more difficult. You need to have a plan. The uncertainty that came with 2020 taught us something: you need to have a plan. So whatever you do, there has to be a strategic plan in place when you want to start investing. Getting a plan means you have thought of everything and have had time to do the right thing. For someone with a plan, you are less likely to panic sell when things are not going according to plan because you are sticking to a plan. Always believe in winning stocks. You do not always need to trade with the strongest companies to make your return in the stock market. There are other businesses that show potential to make their stock prices rise. There are also those established companies that made good returns despite the economic situation of 2020. Examples of these companies are Zoom, ZM, Shopify, Shop, and Tesla, Trade Desk, TTD. If you invested in any of those, like me, and any of these stocks, you should be all smiles by now. In conclusion, what I want to tell you, I want to personally congratulate those who made the right choices during the trying times of 2020. However, if you made any wrong choices, I have good news for you too. They can be corrected, so count it all joy that you have gained the relevant experience that would ensure you never make these kinds of mistakes ever again. I believe this video was quite informative. So, prove me right by clicking the thumbs up and share buttons and leave your comments below. I want to know your views, your thoughts and your comments, so please drop them in the comment box below. Also, do not forget to subscribe to my channel, and till next time, stay green and motivated.